welcome back to the channel. So today it's going to be an interesting topic. So today we are talking about how to pay your current car loan off a little bit quicker. I know that for years and years and years and years I was paying a car note just like everybody else. So funny story. So when I was in college, I think it was English 101 or something, and there was a young man in there, and he was saying, oh, I don't have a car note, you know, my dad paid my car off in cash and blah 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 blah. And I'm looking like, what? Cash? Who got that much money? I didn't know, y'all. I was naive. I didn't come from, you know, a lot of money, so I thought you having a car note was the way to go. I thought you were all the way grown. You were a big grown up if you had a car note. You get a little older and you realize that not having a car note is the way to go. And so through the years, you know, I tried different things to pay my car off early, and it just took longer until I was at work one day. This is probably like 10 years after college or something. I was at work one day, and one of my coworkers had bought a boat. And so he came in the job and he was bragging about his boat and how he did this and how he did. I'm like, how the heck did you, how do you have a boat? Like, we work the same. I can afford a boat. How do you have a boat? And so he told me this secret. Well, maybe it's not a secret. I just didn't know it. It was a secret at the time. And let me tell you, this changed the game for me. So not only do I have one vehicle, I have two vehicles, and neither one of them have a payment on it. And let me tell you how I did it. So I'm going to tell you one method, and it's a little controversial. You might feel some type of way about it, but hey, take what you need and leave the rest. So if this doesn't work for you, I got two things that can help you pay your car note off faster. So if you don't like the first one, try the second one. If you don't want to try any one of them, then okay, that's fine. But I just want to share the knowledge that I have and how I wind up with two vehicles and neither one of them had a car note. So let's jump right in. You ready? Are you ready? This is going to sound weird, and it's going to sound crazy, and it's going to sound irresponsible, but it worked. So what I did was I took the money out of my 401k. Now, before you get to judging and before you say you're crazy and before this and before that, let me explain how it makes sense to do it. Right? So when you have a car note, you are paying money to that bank, financial institution, whatever. You're paying money to them every single month, and you're paying the interest to them every single month, right? Right. So that money is leaving out of your pocket and it's going into somebody else's pocket. Why not pay yourself principal and interest? So the job that I used to work on, we had 401k through Fidelity. And it had an option to do a general purpose loan to where there are no penalties for you to withdraw that money. You set up the terms of how you want to pay it back. So if you want to pay, I don't know, $100 per paycheck, $150 per paycheck, you pay that money back to yourself. And guess what? You pay the interest back to yourself. So ask yourself the question, would you rather pay somebody else principal and interest, or would you like to pay yourself principal and interest? So me rationalizing things in my mind, okay, so you're saying probably, well, that's not really getting rid of a payment, but it is. Because once you pay the money off to whatever bank loaned you the money in the first place, they can't come get your car. Ever. That is yours. The title is coming to you, darling. That's yours. You never ever have to make another payment to them. You never ever ever have to worry about somebody pulling your vehicle out of your yard. That is yours. The money is going from one place to the other. You are paying it to yourself, but not only are you paying it to yourself, but you're paying it to yourself with interest. So you're going to put back in more to your 401k than you actually took out of it. So to me, that was a win-win. I would rather pay myself principal plus interest that equals my payment than to pay it to a different institution. And so that's how I made the choice to take the money out of my 401k with a general purpose loan. That way I am not penalized in any way for taking it out, paying off my vehicle with the bank, and now the money is coming out of my check every 2 weeks, and you set the terms. So if you want to pay it off in a year, 2 years, however you want to do it, you set the terms. Now if anything happens and you default on that payment through Fidelity, what they do is they take whatever balance is left and they add that. They give you, I think, a 1099 or 1098, one of them 10 forms. They give you that and they count it as income toward your taxes that year. But still, the car is now yours. You never ever have. Now I paid mine off through my payments. I paid it all off, so I didn't have to worry about the latter part of what I just said. The car was mine. I set it up through my payroll deductions, paid it off, paid myself the interest, and I was done. That's the way to pay your car off. I can't see any fault in it. Now, you do what is best for you. You know, do your due diligence, do your research. I had Fidelity, and that was the terms that was set up with the company that I was working for and Fidelity. So from my understanding, each company has different terms that may not work for you, that may not be an option for you, but that also may be an option for you. So check into that, because I mean, I was paying $423 a month for my car. That to me was a good chunk of change. And so now my car is paying me because it's paid off. I don't pay a car payment. And my other vehicle, it's a work truck, so I just saved some money, and I just bought that cash, and that one never had payments on it at all. But now I have 2 vehicles that are completely mine. Nobody can come in my yard and take my vehicles. And let me tell you, let me be completely transparent. I've had that happen to me before. Listen, I got a story, y'all. I'm not just getting up here making up stuff, telling y'all, you know, oh, you should do this, oh, you should do. No. I am telling you what I did. I am telling you what I've been through. I have had repossessions. It's not the end of the world. You would get through it if you have that, but you need knowledge. You cannot win the game if you do not know how to play it. You got to know how to play these rules. Listen, I said this was a secret. This is not, people have been doing this for years. I just didn't know. I had no clue. I would have never thought to take the money out of my 401k to pay my car off. If somebody hadn't planted that seed in my head, I would have never known. I would have, oh my God, y'all, that put me so far ahead. Because think of it like this, and I mean, it doesn't even have to be just for that. It could be for whatever you want to pay it off. As long as you're taking it out without penalty. Now, if you're taking it out with penalty, don't do it. But if you can take it out, a general purpose loan, and pay off whatever you need to pay off and pay yourself back, that frees you from the debt from an outside person. And even if something happens to where you cannot pay it off, then it's just counted as income at the end of the year with the IRS. Either way, I don't see how you're losing. Okay, number 2, the tip for number 2 is principal only payments. So a lot of people don't know that you can do this. You don't just have to pay your car payment to pay your car off. I hope that makes sense. You can pay your car payment and you can make extra payments called principal only payments. Any bank will accept them. So principal only payments is kind of like making mini down payments on your car every single month. So when you put a down payment down, the amount that you're putting down for down payment, that amount is not financed, right? So there's no interest on that amount. So when you make a principal only payment, same thing. That money is not financed because you're putting directly towards your principal. Your principal is what the car actually cost you. Your payment is consisted of principal and interest together. And that makes your monthly payment. So make your monthly payment. Don't ever stop making your monthly payment. Make that payment. But if you can, add $25, $50, $100, whatever you can afford. Add that to a principal only. So when you pay the payment, you make sure you tell the company this is principal only. I'm not putting $100 towards my next payment. I'm putting it towards my principal. The more money you pay towards the principal, the less interest you're going to make. The less interest you're going to pay, and the faster you're going to pay it down. And think of it like this. If you think that $50 or $25 is not a lot of money, think about your debit card. Think about $10 here, $17 here, $23 here, $50 here, $100 here. And before you know it, you have a whole list of transactions that have added up, right? So just like they add up to take out of your debit account, they add up to go towards the principal on your car. So consider making principal only payments, and you don't have to do it every month. Do it every 2 months. Do it every do whatever you want, really. But just know that you have an option. If you want to pay it down quicker, make principal only payments in addition to your monthly payment. So those are my 2 tips for paying off your car early. Hopefully that helped you guys out some. If you have any questions, let me know down in the comment section. If you like this video, please like it. If you can share it with somebody who can grab something from it, please share the video as well. Otherwise, I'll see you in the next video. Ta-ta for now.